Today, we're going to focus on down payment assistance. Specifically, we're going to talk about state and local programs, which Texas has a ton of. Here are just 7 that I'm familiar with. There are plenty of sources of down payment assistance, of closing cost assistance, and all of these programs are a little different. So I'm going to just go through what makes them different, and then I'll highlight 2 of the best programs, which essentially operate the same. So it's actually like going through one program. So I'll just pull one out that I think is a good program and that most people will qualify for. But let's talk about the differences. And I have a little dizzy image here because it's a little confusing, the differences in them. And again, I'm providing this as a recording so you guys can have access to it. Also, if you have questions, you can send me email at marcus@springhomesearch.com, marcus@springhomesearch.com, and feel free also to give me a call at 281-969-3817 if you have any questions. So hopefully that works for you. All right. So every down payment assistance program they give different amounts, anywhere between 1% and 7% of the sales price. So that's what makes them different. Also, some are what they call silent seconds and some are grants. So I know you want to know what's a silent second. So a silent second is a second mortgage that doesn't require any payments. So they're going to give you a second mortgage that they're going to require that you pay back when you sell the house or when you refinance. But they don't require any monthly payments. So they're called silent seconds. So some are silent seconds, and then some are grants. And grants are great because once they give you the money, it's forgiven. You don't need to repay it. A lot of times they'll say, though, that they'd like for you to stay in the house for maybe 5 years, 3 to 5 years, and you don't have to repay it. So there's a difference there. Now, most of these programs are going to require that you be a first-time home buyer or that you haven't owned a home in the last 3 years. Okay. But some of them don't have that requirement. Some of them just require that you don't own a home at the time you get the mortgage. So essentially, you could sell a house one day and then the next day purchase a home and you can use down payment assistance. So that's pretty cool. So some you don't have to be a first-time home buyer, some you do. Okay. Some of the programs will make a rate adjustment if you take down payment assistance. So let's say the going rate right now is 4%. If you took a program, if you took some money for a program, they may give you now a 4.5% or a 5.5%. So some programs, there is a catch. You might have to make a higher payment if you take down payment assistance. So keep that in mind. Also, some of them are going to require quality control. Okay, so a quality control inspection, meaning after you do your home inspection, after it passes your inspection, the down payment assistance program is going to send out their own inspector. Okay, so you got to look out for that. In some markets, that's going to be a challenge because, in a market where it's a seller's market, let's say there are just a lot of buyers and not a lot of homes for sale, you're going to have a little trouble convincing a seller to take your down payment assistance program, take your loan that has down payment assistance, because you're going to have to do 2 inspections and it's a little more hassle. So just keep that in mind. Some of them require quality control inspections. Okay. Then you have most programs have income limits. Okay. They're going to say, hey, if you're buying in this area, you can only make 80% of the median income. Or if you're buying in this area, you can make 140% of the median income. So they're all going to have income limitations. Some of them are going to be low and some of them are going to be high. Also, some programs are going to base the income off the household income, everybody in the house over 18. And some are going to just base it on the borrower's income, which means you may be able to qualify for the home that you want just on one spouse's income. Okay. Some down payment assistance people will say, okay, even though you're buying with one spouse's income, Both incomes are going to have to be under a certain amount. And then you got some that don't care and say, hey, just the borrower's income has to be under a certain amount. So hopefully that makes sense. And then there's going to be a purchase price restriction on some of the programs, meaning you can't buy a house for over 200,000 in this area. There's also age restriction. You can't buy a house that's under or that's over 1970. Usually it's 1978. If there is a restriction, they're going to say you can't buy a house that's older than 1978. So basically, there are restrictions. And that's why it's good to have someone like me that can kind of help and guide you through some of the challenges with these programs, right? So you just call me if you are interested in one of the programs and you have some questions. I can basically walk you through a lot of these qualifiers. So, but let's pull out the program that I like, which is the Southeast Texas Housing Finance Corporation, otherwise known as the SETH program. It has a cousin called the Homeowners Across Texas, or the HAT program, which is very good. And they're essentially the same. So I'm going to basically run through them. The only difference is that the amount. So they're both grants, which is good. The SETH program will give you 6%, up to 6% of the sales price. Isn't that great? So you can get 6% of the sales price towards your down payment and closing costs. Okay. Now, the SETH and the HAT program are they both will have adjustments to the rate. So if you get, let's say, a 3% grant, your rate may be around 4.5%. Now, mind you, at the date of this recording, that's what the rates were. However, they change weekly. Okay. So keep that in mind, that this is just an example. If you get a 6% grant, your rate may be 5.5%. So there will be a 1% difference between 3% and 6%. Okay, so keep that in mind. Your income has to be less than $96,800 if you're buying in Harris County or Montgomery County. Okay, and that's one borrower. They don't take household income. So if let's say the husband makes $96,800 and you guys can qualify for the house you want with that income, you don't need to include your wife's income in the qualification. So that's why I like this program, because it allows a lot of people to take advantage of it, right? You need a 640 credit score, which isn't too tough to get, right? There's no quality control inspection, and a home buyer class is required. So depending, I think it's like 8 hours or something like that. So this is the loan. I'm sorry, this is the down payment assistance program that I think most people qualify for. If you have any questions about it, if you want to look into it, give me a call, send me an email, marcus@springhomesearch.com, and I will be happy to get you guys qualified for it. Okay, so let's run down a quick scenario. So if you're buying a $200,000 home, right? We said your down payment's 3.5%, 7,000. Your closing costs are 2.5%, 5,000. So you're going to need $12,000 to buy a $200,000 home. So scenario one, you take the SETH program and you go with the 3% option, and you borrow and you get a grant. Keep saying borrow. If you get a grant for $6,000, and then so you need another 6,000, right? So you negotiate with the seller using my wonderful negotiating skills, and we negotiate with the seller, and we get the seller to compensate us $6,000. So with the SETH program, $6,000, and the seller $6,000, now you have $12,000 to pay to your down payment and closing costs. Just that simple. Okay. But let's say the seller is, you know, uh, let's say the seller will only give you 3%, $3,000. Okay. So you're getting $6,000 from the SETH. You could actually go to the SETH program and get $9,000 if you wanted to. You could get the whole 12,000 from the SETH program. Okay. But let's say you wanted to keep your payments at 4.5%, your interest rate at 4.5%. So you get the SETH program, 6,000, the seller, you would negotiate only 3,000, and then you bring $3,000 to the table. So I hope that wasn't confusing. But you can purchase a home for as little as $3,000. And we didn't even take into account a lender credit. We didn't take into account, well, we did take into account seller credit, but you can get a lender credit. You can still, if you still need a little change, you can borrow from your 401k. I mean, it's so simple to buy a home with very little down. Um, I'm just excited about it.